Hi, Larry Gaines, PowerCycleTrading.com. In this video, I'm going to show you a really cool way to trade what I call offense and defense. So this is what we call pairs trading or spread trading. So this is basically a way of trading, a trading strategy used by most of the large hedge funds, and it's something I've been using for over 30 years. So you can spread pretty much anything. And in this type of trade, what you're actually doing is you're pairing two things that are similar and kind of a correlation. So here's Apple, and then here's the QQQ. So Apple makes up part of the NASDAQ 100. So there's a correlation there. But what you're trying to do here is you're trying to offset any kind of systemic risk or overnight risk. So in this example, I'm going to show you, this was an earnings trade setup, a pre-earnings trade for trading into an earnings release. So Apple had its earnings release today. So this is a way that you can go long Apple and have it hedged out in case there's some kind of major event overnight that could push the rest of the broad markets down, which could affect Apple or whatever else. So this is Apple looking for a long trade setup for momentum to the upside, and then paired this by selling short QQQ against it to offset any of the potential downside risk. And you can actually see here, this was set up on the 17th of October. Okay, so right where these lines are. And at that point in time, Apple was trading at 235.93. So this was long like 100 shares. So you can also do this using options. So this was using a synthetic long and a synthetic short for the QQQ. But in comparison, it's basically you're long 100 shares of Apple right here at 235.93, and then at the same time simultaneously you're selling short 100 shares of QQQ at 194. So you can see here at when that was sold short, QQQ actually went down from 194 all the way down here to 190, but Apple actually did not go down at all. So this hit a low here of 190 actually the next day on the 18th, and Apple the next day on the 18th was pretty much unchanged. So that's the perfect environment. So Apple stayed strong, QQ came off, and even if Apple came off, you can see QQQ was coming off harder. So basically you're playing the trade is to play the spread between Apple and QQQ, and here's what it looks like as a spread itself. So the spread value is determined by taking the long at 235.93, that's where the long was set up, and then minus the short at 194. So it's that spread value that now you're going to play on this type of trade setup as a pairs or a trade. So here's what that looks like. So now all we care about is what the spread does. So we're now long Apple at $41.93 per share above QQQ. All right, so look where it went. So right now, Apple made a high up here. It went from $41.93 per share over to a high of $51.48 per share over, so or $51.45 basically. So if you take that $51.45 less your cost here of that spread, $41.93, the difference is your value and the gain on the spread. So at that point, that high point right there, this spread was $9.53 per share over, and if you did 100 shares, that's $953. Okay, so that's a profit of $954.53 from the spread going from $41.93 per share or per 100 up to $51.45. Now it went out at $46.68 or 50 today, right before the close. So that spread value is from 41, right here, $41.93 to where it closed here at $46.35. That's $4.42 per share, or on 100 shares or an option contract, that's $442. So it's a really great trade setup for any type of trading. We do this with crude to gas, all kinds of different crack spreads, we call those, and also different pairs trades with energy stocks versus XLE, etc. So if you'd like to learn more about this, join me this Saturday. We'll be doing a free webinar on pairs trading. Hope this helps. I'll talk to you on my next video update.